Joining me now is Andy Baehr, Managing Director of CoinDesk Indices, who watches all of this very, very closely. Andy, it's great to have you here, given the action that we've been seeing lately, which has been really interesting. So there's all of this sort of fundamental enthusiasm that's going on, institutional adoption, what's happening in Congress during so-called crypto week. And then, as always, there's sort of technical effects in the market. So how do you attribute sort of each of these buckets in terms of how much they contributed?
First of all, good news. If you were worried you'd never be able to buy a Bitcoin for under 120,000, the market's giving you a second chance, so I would go ahead and take advantage of that. Bitcoin had been trading in a very, almost historically tight range ever since May 7th. The 10% range broken only a couple of times. So a lot of the trading and, as you say, technical and positioning activity had been around maintaining that range. So when it popped up above that 112,000 level late last week, a lot of the derivatives positions, especially in the crypto native market, were kind of poised for that level to keep. So there were some liquidations and short options positions, which gave Bitcoin's price that extra shunt up over the weekend above 120.
Okay, let's just linger there for a second just to explain that. So if I'm short Bitcoin in some way, in some market, and then it's effectively like a short squeeze that happens in the equity market and other markets. The price moves up, you have to get out of your position, which means you end up owning Bitcoin or whatever the underlying thing is.
That's right. In most Bitcoin or crypto native markets, perpetual futures is another form of futures contract. Makes it very easy for people to get long or short. They'll usually post a very limited amount of collateral. So one mechanism, which sounds terrible in traditional markets, but is not unusual in crypto native markets, is that collateral gets liquidated and the position basically gets closed out. So it happens with some regularity on the downside and on the upside. The liquidations last week were nearly at a record level, over 2 billion of perpetual futures liquidations on July 10th or so. So that helped kind of propel the price back up to its newly discovered level of around here, up about $5,000 or $6,000 more, and now we've settled back into place. So it's not really a cause for concern. I think we see these kind of overcorrections that are caused by these market effects, but still, there have been, there's $200 billion now in investable crypto-linked products in traditional space. So that's 5.5% of all of the crypto market cap. So we've gotten to some pretty interesting levels of adoption, and the inflows, especially into US Bitcoin and Ether ETFs over the last several weeks, have been notable. So the demand side seems pretty firm and not at all kind of flighty.
And not at all, the sort of number go up philosophy that was the thing really that propelled crypto for a long time. I mean, that's still there, but it feels like that
we're never going to let that go.
I mean, that's why a lot of people still buy it, because they think it is something that is going to continue to go up in perpetuity in some cases. But how important and what role is the congressional discussion around crypto having this week?
Two big things, and let's link the macro side. Although I'm more Fisher Price than Fisher Black when it comes to macro. But look, the dollar's had its weakest first 6 months of the year in many, many years. And so this idea that both gold and Bitcoin are being latched onto as stores of value is pretty credible, right? Also, you have treasury companies that hold Bitcoin and other assets becoming more popular. More people are just learning about the ETF and learning about how allocating to Bitcoin can diversify a portfolio that has many asset classes in it. So all of that is less number go up and more just kind of mainstream kind of education and adoption. We feel great about that. The rest of the market, Ether all the way down through our top, CoinDesk 20 names, which was up 16% over the last week, really feels like last November, where there was new hope for regulatory clarity, right? And so, as you mentioned, there are three big things in front of Congress this week, which we're very hopeful a lot of great work will get done, and maybe even the Genius Act gets close to being signed. That helps all the other blockchains, I think, more than it helps Bitcoin. Right, so Bitcoin is going to benefit, I think, from being top of fold, right? But Ether and the other layer ones like Sui, like Solana, they're going to benefit because there's more anointed activity on their blockchains, think stable coins, right? And then other service providers and information providers, other institutional forms of how digital assets can create ease for us in the blockchain world. All of that's been propelled. So if you look at this past week's rally outside of Bitcoin, it looks a lot like what happened last November when kind of hope got renewed.
Just really quickly, Andy, sort of what's the next price target from here? What directionally do we think is going to be happening?
I think rather than focus on a Bitcoin price target, which I think is hard, we feel that demand right now is very strong and very durable, so we think that we're safe there. What we'd like to see with better regulatory adoption is the rest of the market keep up. So keep an eye on the CoinDesk 20 index, which is very broad-based and very diversified. The CoinDesk 5 index, if you're just interested in Bitcoin and Ether and a couple of other top names, that's a good index to keep an eye on. But we think that investors will, at this new chapter, start to actually broaden their horizons for Bitcoin and look at index funds, which will help diversify them and give them access to these other names.